Good afternoon, everyone, and welcome to Stock Market Today for Friday, February 21st. It's Alyssa Coram here. And wow, not a good note to end on this week. A pretty big downdraft on Friday as sentiment continues to move into that cautious territory on economic data. And a lot of growth stocks were hit this week, but the damage was pretty widespread. And here now to break down the action with me today is my colleague, Mike Webster. Mike, we've got a lot to talk about today.
It's gonna be a busy one, so we we can get going. There's so much to go
Yeah.
over.
All right. So we're going to go over our high level view of the market. We'll look at some ETFs to get more of a sense underneath the surface of where that rotation perhaps was or where the weakness and strength was. We'll highlight a couple of stocks and then Webby will share his charts for a deeper perspective on his outlook on the market. So we will get right to it. I'm going to start with sharing my screen. We'll take a look at the NASDAQ composite, a big hit here on Friday, but a continuation of this chop that we've seen over the last 2 months. The NASDAQ down 2.2% on Friday, only to be outdone by the already weak Russell 2000. Look at that.
Ooh,
Small caps
that's ugly, man.
ugly, ugly. Small caps down 2.9%, headed into the final minutes of the trading day there. Meanwhile, the S&P 500 also hit pretty hard here, right down to that 50-day line, down 1.7% on Friday. And the Dow also down 1.7% on the day, undercutting the key 50-day moving average. We'll start with the S&P 500. This has been the leader in this choppy area only a couple of days ago, right at highs. But man, we got slammed back down today, Webby.
Yeah, so this is a market that you have to be very nimble with, and I'll just say it right now. I'm very bearish. So hopefully, I'm a contrary indicator. I don't think I am, but you never know. I mean, we looked so good a couple days ago, and when we were there at the highs 2 days ago, that's where the bulls really should have taken it and pushed it
Mhm.
higher into a Friday, going into a weekend. That's very important. We've talked about it, so many times that the old technicians and a lot of algos and things are based off of weekly and monthly closes, and more so weekly than monthly. And so going into the weekend, if you're a bull, you want to try to paint the tape, make it look as good as possible. And they just backed away, and all day. And it was really kind of what had started us either last Friday or the Friday before, when we had that University of Michigan data that came out that most people don't think much about. It comes a half an hour into the trading day, and it was inflation expectations surveys that really hit the market. At first, it was, just the 1 year out, what that had picked up into the 4% range, which was really kind of spooky. Now, the final reading, that was the preliminary reading. Now, the final reading came out today, and even the long-term expectations were revised higher. So that's a big problem. And anyone who doesn't understand that should, look back at the 1970s and realize that we had this, huge inflation problem, and the Fed was trying to get a handle on it. And so when you try to, tame inflation, you raise interest rates, and that slows down the economy and everything. And then so they would do that, then the inflation would come down, and then and then they would have to reverse course because it was a bunch of whipsaws, kind of like what the market is doing, but over a longer period of time with inflation. And that creates all sorts of problems, because that means,
Yeah. There's like a
we're
wage price spiral situation that happened in the 70s.
exactly. And on top of that, what makes it worse is then the Fed loses credibility, because if they're
Mm.
they're cutting and then they're raising and then they're cutting, and that's one thing, Powell has wanted to go in one direction, and he's really studied the 70s probably more than anyone. And he's a big fan of Volcker, and you should read Volcker's book. It was really good. I've read it several times, and it's Powell's favorite book. I believe he keeps it on his desk. And if you're interested in this type of stuff, I think it's called Keeping at It or something like that. Very good book. But forget all of that stuff for a second. The fears are that inflation is going up, and what you said, the wage price spiral. So if you think inflation is going up, you're going to go to your boss or go to your new employer and say, hey, I need more money because my rent's going to go up, or mortgage rates are going up, or your car payment is going to go up, or whatever.
Yeah.
All
Cost
you
of
just,
living.
yeah, this cost of living, just food, clothes, gas, all the normal things. And so that just is a spiral, and it's self-fulfilling thing that they just keep going up and up and up.
Mhm.
So that's why we're selling off, in my opinion. We got through the earnings. Earnings were, for the most part, pretty good, and a lot of the economic numbers really weren't that bad. But you had some here and there that the market is focusing on right now. But all those numbers were out 2 days ago, and we were at highs. So it's almost as if people are finally, they're unsure of all the news that's coming out of how it's going to play out with all the Doge news. That I think anyone objectively would think long term, cutting spending and waste and everything in the government, if you put your political affiliation to the side, that's a positive thing that both sides, red, blue, purple, would like. But in the short term, it's a lot of uncertainty because you don't know what groups are going to get hit next, what sectors they're going to go after. Let's just pull up Royal Caribbean, for example, because that was one that I had been trading. I wasn't in it for this fall, but you know there was just news out that I forget who it was, but they mentioned that they were going to start looking at taxing cruise ships, and you can pull up the other ones like CCL and CLH, and just instantly they just got hit really hard. And so there's that thing in the market where
Mhm.
you're just not sure where that next news item is going to come from. And Palantir was another one this week that is some of the
Department
new.
of Defense cuts. That was the
Exactly.
headline there that spooked investors this week.
Yeah. So you've got all those worries that you don't know, is the stock that you're holding going to be the next one that they're going to go after. So that'll work itself out. It's just a matter of time, and it's not the end of the world. It will work itself out, and they're moving the ball in the right direction. But in the short term, we're going to have, looks like, more of this chop. And let's go back to SPY for a sec. So we're at a very vulnerable position. We're at a big round number, 6,000. We're at the 50-day. We've sliced through the 21-day like it wasn't even there. But it stopped at the 50-day, which is normal and natural. Like if you didn't stop there, we're crashing on Monday. They had to at least get some support at that level. I will say that the only positions I have right now are inverse spies and Qs. So that's kind of, you know, where I'm at right now based on the action that we had today and yesterday. And so this is where it should stop, but you don't know that it's going to stop there. This is a logical level for them to maybe try to push it down on Monday to see if they can get it much lower. But we're very vulnerable. Let's pull up the FFTY to
Right. This
kind
is
of.
also adding to sort of the cautious, if not bearish stance here. I mean, yeah, down 7.4% the FFTY ETF measuring growth stocks. That's
Yeah,
bad,
and
really
what's
bad.
worse than the only thing that's worse than a 7% down day is, what did it do yesterday and what did it do the day before? How much were we down?
Let's see. Yeah, definitely an acceleration of the losses. Thursday's decline 3.4% to Wednesday's decline 1.6%, bringing the weekly decline here to 12.3%.
Yeah, and so those are our style of stocks, right? There's the growth names, and I will say, this is just 50 of them,
Yeah.
and so, and some of them were the worst hit, so it's a little bit, it's not exactly what it did, but yeah, ARC is a good example. That's a completely different basket that Kathy plays in, but it's still the high growth names and kind of high PE, high valuation type of names, and that's down 6%. And again, it picked up versus yesterday, and down 10% for the week. So that was very tricky. That was an area that I was in, that I was playing, that I had to exit um, out of, because we don't know where the bottom is, and this looks like the beginning of a base,
Right.
and that base could go a lot lower. At the beginning of a base, you never know how low it's going to
Yeah.
get. And I've heard Bill, say a million times when asked, because that's the question everyone always asks when you start into a correction. Well, how low are you going to go? Nobody knows.
Mhm.
You can just guess where logical levels would be where it should stop, but you don't know how much
Yeah.
lower it could go. The first stopping point is a 55 and a quarter on this one, but
Mhm.
and then the next level would be the top of the prior base. And those
Right.
are a long. That's a long way down. So it's a time to really, just kind of sit back. And I did go to cash, but then I was like, you know what, this is a good shorting opportunity. So then I put on the inverse ETFs, and
Mhm.
we put swing trader into cash today too. That was, we had raised cash yesterday, and we threw in the rest of the towel today, just because, frankly, if you're swing trading, anything can happen on Monday. You could, what's logical if things are bad is we actually gap up on Monday and then we sell into it
Roll.
and then it
Yeah.
takes out today's low. That would be kind of a textbook. So I would not get excited with
Mhm.
if we gap up a percent or something on some random news on Monday. If you hadn't lightened up, I would take that opportunity. Uh, Frankly, that's, unless there's something really material different, and I just can't foresee what that would be right now.
Mhm. Great thoughts there, Webby. And of course, when you say Bill, you're referring to IBD founder Bill O'Neill. Because our audience is growing all the time, we want to make sure folks out there know who Bill is. Let's also go to the NASDAQ composite here, clearly hitting resistance again at that 20,000 level, below the 10, the 21, and the 50-day lines here as well. So, Webby, we talk about what your expectation is given the kind of weakness, right? And there are different scenarios that could unfold, like, what could happen Monday, those different scenarios. And it does seem like, and of course, no one has a crystal ball, but it just feels like, at a minimum, with all of the cross currents and uncertainty short term, it feels like until the strength can prove itself and until we see proof of that in the leading stocks getting back on their feet, at minimum, it feels like we're in for more of the same chop.
I would say maybe not even chop, but just a decline, frankly, because we've
Yeah,
been
I that's
going,
why I said at a minimum.
yeah, at a minimum. So on December 18th, that bad break that we had on the Fed day, since then it's been chop. But there's been pockets of times where we were above the 21 day, and you need to be flexible, and you need to find it. And this is something we talked about on IBD Live this morning, is you need to pick your instrument, or indicator or indicators that you use, and you've got to study them to death, and you need to really understand that there's no one thing that is perfect and there's no combination that's perfect, but you can kind of paint a picture, a mosaic, if you will, of how the market is. And so one of the things is, how are your leading stocks handling themselves? Terribly, growth stocks. What we saw today, you brought up, like Coca-Cola. When money is flowing into Coca-Cola, or, yeah, Johnson and Johnson is the one that I always look at, because Bill O'Neill, when we were running the NESME lists, our institutional list back in the day, when we get into a market environment like this, this was his go-to stock. He'd be like, okay, let's put on Johnson and Johnson, and that meant, Mike, look around for other defensive names
Yeah.
to put on to try to protect yourself, because we were selling that list to institutions. Unlike us, who could go to cash or go short, most of the institutions were mutual funds, and they had to stay invested. So it was like, okay, where do you
Yeah.
move into?
There's the safety. Mhm.
But for 99% of the people that are listening today, if you don't have that mandate,
Yeah.
you can just back away and
Mhm.
raise cash, and you don't have to go short, because we could just turn right back around, and if we move right back up, I'll sell my shorts and
Yeah.
my inverse, and just go long again, no problem. But for now, this does not look good, and I'm trying to picture in my mind what would be normal and natural, and really, it's a magnet for that last marked low.
Mhm.
At minimum, that's where you'd want to. If I'm a bear, I would, with a big, um, deep pockets, I'm going to use that ammo next, on Monday and Tuesday, to try to push this down as far as possible. Then we've got Nvidia next week, which could be a catalyst either way. If
Mhm.
let's pull up Nvidia for a second. If that one ends up, having a negative reaction to earnings, that's another, you know, that's another big problem for the Nasdaq, the Qs, and SPY because it's such a big component there, and all the other ones really kind of looking, like
Yeah.
they're in trouble. Like Microsoft looks bad, Apple stalled today, Tesla looks bad. I have a tiny remnant option position there, but I had to, sell that a week or two ago. And
Amazon also a
Amazon
bad
looks,
break of the 10-week line this week. First time below the 10-week line in 5 months.
yeah,
So,
even
yeah.
Walmart, like the slow pokey safe Walmart broke 9% this week.
Mhm.
And then, that went into everything. Like, let's pull up Goldman Sachs, because that
Mhm.
was, that and all of its, similar ones, the Morgans and JPs and all those, had the same type of reaction.
Mhm.
They're selling down now, not falling apart, but still they look sick. So I would love to
Yeah.
be positive, but and you don't predict. Bill taught us to you just interpret the action. The action right now is telling us at minimum, be very, very cautious and just wait. And the reason why I developed the Webby RSI, which we'll talk about later in the show, is to measure the distance between the low and the 21 day. And right now we're underneath the 21 day. So we have no Webby RSI to go
Mhm.
off of. And you want a positive number there,
Yeah.
positive value. So until we can get above that, you uh, at least the way I trade, you've got to
Mhm.
be cautious. Now let's go out to a monthly chart just for a different point of view. You look at the monthly if you're a slow, non-active trader and you look at it and go, oh, nothing's going on. But that's fine. If you've got really low cost basis stock and you're just trying to ride this out for a long, long wave, that's a different animal. So you need to know what time frame
Right.
you're trading. And you might have one account that's just long term that you're doing nothing with. Maybe you're adding whenever the market comes in, but you're actively trading accounts. That's what I'm referring to.
Yeah.
Um,
Exactly.
there's not really safe merchandise right now.
Right. And as active growth investors, we just know that when you are in a trending market, that is when you can really press the gas and get some really nice outperformance. It's in these choppy markets that make it super tough. So we've got to ride this out and get to the next power trend so we
Yep.
can press the gas again.
Yeah, and I have no problem pressing the gas. I'm about as aggressive as it gets, but it cuts both ways. You can't
Yeah,
always be aggressive. Sometimes you have to be
slamming the
aggressively
brakes.
conservative.
Exactly. Okay, let's take a look at ETFs to give more of a sense of what things are looking like underneath the surface, where there's strength, where there's rotation. And interestingly, China, an area of strength again this week. For the last couple of weeks, money definitely flowing to China here, Webby. Here's a look at the KWeb ETF.
Yeah, so I bought that yesterday, and I reluctantly sold it today, just because when the market starts getting like this, people tend to sell just the things that are up, just to lock them in, and I didn't want to be caught um, in that. It was doing
Mhm.
nothing wrong. It really broke out of this double bottom, at 34.83 is really kind of your midpoint, and it was like a double bottom with a mini handle, not really long enough to be a true handle, but it was in the spirit of a handle. And really, it was Baba that had earnings this week that had that nice reaction, and it had already been going, and then it just brought all the rest of them with it. So if I was going to be in a space, I'd be there. But China brings a ton of risk. Let's go back to KWeb and look at some of those gap downs in there,
Yeah.
back in October. I mean, those were nasty, big, 10% gap downs. So that's in the cards. And again, this is something that would be very news oriented. If President Trump comes out and,
Mhm.
increases tariffs or something
Tariffs.
else
Yeah.
that could impact there. So, but, that is one bright spot.
Yeah. Okay. Well, underscoring the defensive vibe in the market right now is XLP, the top performing sector spider ETF of the day, perhaps the week, but for sure on the day, up 1.2%. And that relative strength line spiking. So definitely a flight to safety this week.
Yeah, and not what you want to see, right? We talk about that all the time. You
Mhm.
want XLP to be going down, and that's the trade. And people have got to remember that's just mutual funds taking money out of their hot, gross stuff and hiding over there. It's not like people are going into the Johnson and Johnsons and Cokes and thinking they're going to have a 10 bagger there.
Yeah.
It's not going to be the next Palantir. You know, but so it's just a safety play. So it's not where we would really want to go.
Right. Okay. A new addition this week, SPHD. This is the S&P 500 high dividend index, low volatility, high dividend here. So seeing some outperformance as well this week.
Yeah, so I just wanted to throw that in there because I know that there's a lot of junkies out there like me who like to trade, and if you're just looking, dying for something, a space to go in, would be something that I would consider. But just because
Mhm.
if this continues on, that's most likely the area that's going to hold up the best or maybe move up. But
Mhm.
again, just being in cash is probably better.
Okay. And quickly taking a look at utilities, fractional gain on the day. But if you're looking at relative strength, being up fractionally while the S&P 500 takes a big hit gives you that relative outperformance. But this is also a very defensive area, as we know, utilities.
Yeah, and I'll let you take the rest of these
Okay. We'll go
so we can
quickly.
see clear. Yeah.
Jump in, please jump in to add color. Gold, we're continuing to track. It's extended, but continuing to show that relative strength over the last 2+ months here. XLV, this is healthcare, also a defensive area. So showing that relative outperformance this week.
Probably worth pulling up UNH on the
Yeah.
XLV, which is the biggest component there, and you can talk about that if you want.
Oh, well, there is a probe here that is underway now. That's what the headlines hit about how they're doing the billing here. So hitting the space, and I know this was also one of the reasons why the Dow was getting hit, even while other more defensive components were outperforming on the day. So as we know, UNH already beaten down, so continuing to show weakness there. But it does look like the broader healthcare sector holding up relatively well in spite of that. But this is not an area really where I'm going to be fishing. It's more of like if a screen that I have, a stock gets filtered through in that happens to be in the health or medical space, then I'll consider it. But I'm not going to actively go out and seek medical sector exposure.
Hmm.
Here's a look at real estate, also defensive and holding up in recent weeks. Biotech, I think even with the relative strength in the last week picking up, if you take that step back, this is a weak area. XLF taking a hit over the last 2 days, as Webby mentioned, but perhaps these stocks just need a little bit more time to develop some setups. It's not broken here whatsoever, as you mentioned. Here's a look at XLC. This is communication services. So we have Meta and Google in here, and I believe those are Mag 7 stocks that we haven't checked in on yet. So you can see the outsized decline here for Google on Friday, down 2.7%. Meta, which has been the best looking Magnificent Seven stock in 2025, down 1.6% on the day. Its first close below the 21-day line since that breakout.
I would say that that's the best looking one out there that I would consider like next week. Like, let's just say I'm wrong on the market and we just move up. Fine. That I would love that. There's no time I would rather be wrong. If we moved above 700 and really today's high and
Mhm.
yesterday's high, that
Yeah.
would be a bounce off the 21-day that I would take. So it's at the top of my list.
Okay. RSP, this is the equal weight. Thoughts here on breadth, Webby?
Very bothered by it, frankly. That that it was that weak. It couldn't gotten a lot worse. I was in it. We had it on Swing Trader. I had to exit it. I had it in my own account. I had to exit it. Just it's not a lot of risk, but it's just like,
Yeah.
the only reason to hold this at this point would be to experience hope, and I don't want to experience hope. So I'd rather just,
Yeah, to have
wholesale
exposure
and
for exposure's sake, which
exactly.
is not necessary. Yeah, all right, well, there's a pretty clear range that we wanna see it break out of, so we'll continue to watch that. Next, we'll go to UTES. This is another take on the utility sector that looks like a lot of those AI utility stocks, Webby.
I would be very careful with those because they look in very
Yeah,
vulnerable positions. All those ones that they're not really utilities, they're AI utilities, like you were saying. That that is not a place that I would consider buying at all.
mhm. Bad break, wedge, and then another rejection there that's almost more like a shorting kind of
If I
setup.
had the guts, I would have shorted that, but I don't have those kind of guts because you still do have the risk on that of
Mhm.
them coming out and saying the
Right.
DeepSeek was just fake, and then those things
Yeah.
rip.
'Cause we have
That's
NVIDIA earnings next week. So
yeah,
these could really move in sympathy with that.
yep.
So for better or worse. Here's XLB, the materials, taking a hit today. What do you make of the materials sector here, Webby?
What do you make of it?
It's a pass for me.
Yeah, that's what I'd say, yeah.
Really quick, the Nasdaq 100 equal weight here, down 1.9% on the day after a breakout. So is this concerning?
Yes, but on a positive note, it did stop at the 21 day. So that
See what
is
happens
good.
on
Like
Monday.
even if you're super bullish, you always want to look at bearish things. And if you're super bearish, you want to look at bullish things. You want to stay neutral with your thought process and objective.
Open-minded.
Yeah, open-minded. And this is normal. It's relatively normal. And
Yeah.
so it stops at the 21 day. We'll see what ends up happening. And
Mhm.
that would let's just pull up Qs. Oh, Qs are next. We'll see that in a second.
Yeah.
So with this one, it went underneath its 21 day and it's a lot in a much weaker looking position. And they were down about the same amount today, but this one is the market cap weighted version.
Mhm.
So obviously just more selling in those big names.
Okay, here's a look at XLE Energy. This also remains a pass for me in general. There might be one or two names underneath the surface that are holding up and looking interesting, but in general, not a sector I'm particularly gravitated towards at this moment. Industrials breaking today, Webby, down 2.2% after holding steady over the last couple of weeks. Your thoughts?
Yeah, so this was kind of like the other ones that are. I keep saying that they're a magnet to a certain level, magnet to a certain level. So this, yesterday was a magnet to that level. Now it undercut it. So now it's time for it to either be a shakeout in the handle, which would
Mhm.
be ideal. Just a little bit lower and then move higher. So I'm going to keep an open mind with that. But that RS line has been going down, but that's also good in that we're kind of in this rotation market. So
Mhm.
what hasn't been working might start working. So I would look to see, I know it's not intuitive, but I would look to see if there's setups there that with one last shakeout might look good. But, if
Great
I was
call.
in it, I would be concerned.
Yeah. All right. Well, speaking of shakeouts, we do for consumer discretionary, which Tesla and Amazon are in
Mhm.
here. We did get a move below the prior low of the base here. So potentially a double bottom taking shape. That would be sort of the optimistic view here of, hey, what could set up in a
Yeah.
couple weeks time.
Yeah, and with a double bottom, you normally shake out a fair amount below
Yeah.
your first bottom. So that would be wonderful. Like if I could tell the market what to do, it would be a horrible gap down on Monday. Let me close out my shorts and then rip and turn up, and then that would create
Yeah.
some really nice charts. But somehow I don't think the market's going to listen to little old Webby.
Never know. Maybe one of these days. But I think being open minded, like you said, instead of just getting totally bearish and
Yeah,
everything's terrible, where, it's got to be a whole nother year before we see another uptrend. Hey, this could just be a shakeout, and let's be open minded to a potential turn, and so we catch it instead of miss it. Because I feel like that's what happens a lot of times with traders that we speak to every day is uh, people in general, and it's human nature, right? To wait for a little bit more proof, or where it is a little bit more obvious, to feel ready to be bullish, right? When actually then it's kind of, well, we got to catch the turn, and that's really when you're in the strongest position to make money.
Yeah, so that's really good points. And you always want to maintain total flexibility with your
Yeah.
mindset. And Bill once told me, you got to bend like a tree in the wind, and that stuck with me forever. From the moment he said that, I was like, it's exactly right. And that's what I saw with him. He would be like, if he was with us right now, he would be way more bearish than I was. I know how he looks at charts, and he would be super, super bearish. But I guarantee you, we
If
had
the
a couple
breeze
good
blows the
bars,
other way.
he would
Yeah.
he would turn on a dime and be more bullish than I could ever be. So you have to, that's the mold that, I'm in, or that's how I've been trained, and how I've observed. So that works for me with my personality.
Mhm.
Now, if that doesn't work for you, like not you, but other people, pick the things that work for you. So
Yeah.
a lot of people would be like, oh, all this daily stuff, that's noise. I'm just going to go to a weekly. Weekly might be too much noise for people. They go to monthly. Pick, that's very important. Pick what, we've got a daily, weekly, monthly, and intraday chart on there
Yeah.
for a reason. You want to pick the one that works for
Right.
you, and figure out ways to cut out the noise.
Yeah. Well, we have so much fun actively trading, so we like looking at all these different time frames. Okay, XLK, the technology sector, as we know, taking a large hit on Friday, getting rejected after hitting recent highs. Obviously, very similar to the Qs and to the Nasdaq. SMH. So here's a look at the chips. Just like those utility AI stocks, we had that bad break, the wedge up, and now a big decline on Friday to cap the week down 3%. And we have NVIDIA earnings next week. So it'll be interesting. Will that spark some follow on action, or will it be kind of a dud? Last quarter, actually, NVIDIA's reaction was kind of a dud.
I
You know,
never would have thought that.
yeah,
Like, I would have said, "Oh, up 5%, down 5% minimum," like, but
yeah,
really 10%, but doing nothing. That was so strange,
yeah,
that was not normal and natural, so you're
yeah.
always looking for. So with this one, it's got this little double bottom that it's formed right now, but what's bad about it is it's a double bottom that is kind of both next to the base,
Mhm,
that 152.89 base, and also underneath the base. So a lot of this is formed underneath it, and it's next to it, because by next to it meaning that the left side high of this base, 153.13, is just essentially the same as the left side high of the other one. So they're next to each other. What you want to see, a powerful pattern, powerful setup, is a
mhm,
base on top of a base, or at minimum a base next to a base, meaning, you know, this low would have been contained up at like 126 or 128,
mhm,
but we went way below it. So this is a very weak setup. If it wasn't that it was such a important stock, and Jensen is, genius and all this stuff, I
mhm.
would have shorted the SMH, but
Yeah,
it's just so risky going into an earnings
yeah,
event, because if he pulls a rabbit out of his hat, man, that whole sector is going to go, and it'll probably lift everything else. So
yeah.
you're going into a major risk event, but that does not look
Mhm.
like a good setup to me at all.
Yeah. I wonder if Scott shorted this today. We'll have to ask him on Monday.
Of course he
I
shorted
feel
it.
like he did.
Yeah, how could
Let's
he not
bet
short
now.
that?
Well
I
well
bet you 51.5 bucks.
we'll ask him Monday. Yeah, I think the difference this time potentially is that this is the first report after the deep seek destruction day. So there's that many more eyeballs focused here. And it's their first quarter with the Blackwell rollout. So who knows? Will that spark a little bit more volatility, or oomph in the move either which way? We'll have to see. But an interesting debate there. All right, let's go to another new one on our list, and I will we'll kick it up here. We're almost done. VXF. So this is tracking small and mid cap stocks. So underscoring, uh, I would say the extreme weakness, or the emphasizes that there's even more weakness in the small and mid cap area, which potentially concerning here. What do you think, Webby?
Yeah, that's why I wanted to add this one on there because it's a broad based, and we always look at the IWM and the MDY and stuff, and it's just another way of looking at it. And I like looking at instruments that most people don't look at. It's just a little bit more real information, and this is again, it was a magnet for the 194.05, but it went too far below it. So this is really broad based. My understanding, it's been a while since I looked at it exactly, but I think it's all the stocks except for the S&P
Mm,
500. I have to double check that, but so it's something I haven't used for a while, but that's very weak. When I was playing through all the ETFs that I look at, I was surprised at how bad that looks. Like obviously IWM looks bad, but IWM has looked bad for 3 years,
yeah.
you know. But this one was looking pretty,
Hmm.
pretty good.
Hmm. Okay, let's see. I think we've just got a couple more here. Retail with the Walmart earnings report signaling signs of weakness in consumer spending. Retail clearly taking a big hit. So this looks like an avoid area as well for now.
Yeah, absolutely. And I think Walmart was a classic one there. What was interesting was Costco held up fairly well.
Mhm.
And so it's a little bit of a different
Yeah.
clientele. The Costco, I would say, I take it back. I said a different stock was the best looking one. I think Costco is the best looking chart out there right now because, Meta, we were waiting for it to go back through the 700 and Thursday's high. But this one stopped right at your 21 day. Like if I had to be in something,
Mhm.
this is where I would be. And it's also above the 1,000 level. The only thing is you've got earnings, yeah, kind of around the corner.
Yeah. Good note there. All right, continuing forward, IGV, this is software also taking a hit today. A lot of the types of stocks that we are interested in that growth area that have been leading are in software. So a big hit there.
Can we look at
Uh,
CRM for a second? I know we're
sure,
dragging on, but today's an important day for
it
people to
is.
see. So this is not what you would want to see with a potential double bottom. This is really a cup with handle that failed to break out and is breaking down. And that is a really vulnerable um, type of
Mhm,
chart. Now, CRM, great company. Let's go to the monthly. It's had big moves over the years. Monster, institutions, are deep in there. But when that one's breaking that way, and let's look at service now. We could start on the monthly and then go to the daily. Again, a monster stock, even better than CRM. Now let's go over to the daily, and
mm,
that broke down kind of very similar, but it actually broke out, and then you had your gap down, and then looks like you know, it wants to go down to 800.
mhm.
That's just bad for that whole space. So I'd be very careful with software.
Yeah, that makes sense. Okay, so that was look at IGV. Bitcoin tried to get back above the 50-day line on Thursday, but rejected in that area. We've been talking about this as a potential proxy for risk on. And so that makes sense that this isn't, off to the races right now.
It doesn't look that bad. I mean, I wouldn't buy it, but it doesn't look
Yeah,
that bad.
yeah. I mean, I feel like it's very close to being potentially actionable.
Yeah.
So, okay, FNGS representing the FANG mega caps. Notable here in that this is the first break of the 50-day going back to last September, last
And that
August
that was another reason why it turned so negative on the
mm,
market is because that was really your leading index
area.
for
Yeah.
leading area for a while. And when that breaks that way,
Hmm.
it's kind of like the market has to prove itself,
Hmm.
you know, and that's not how you prove itself by, and there's only 10 stocks. So it could just be those are the 10 that are out of favor right now. But we saw with the RSP, the QQE,
Hmm.
the total market, the VXF or whatever it was, all these things, they all look weak except for the ones that you don't want, like the XLPs of the world or the XLUs. So
Right.
again,
Yeah.
it's a mosaic that you're putting all these little
Yes.
pieces together, and I
Hmm.
spend my Friday just looking at everything to try to get a sense for what I'm going to say, on these
Mhm.
shows because I take them very seriously. And yeah, it's like I was looking for like some bright spot.
Something
Like
positive.
I couldn't find
Well,
it,
you
man.
did. You said Ibit setting up. So there
No,
you
no, no.
go.
I said it didn't look that bad.
Oh,
I
okay.
wouldn't
Okay.
buy it, but it
All right.
doesn't look
All
that
right.
bad.
Yeah, yeah, yeah. And so when you do get a break of the 10-week line, it does seem like in many cases that means, okay, we need some sort of longer digestion or base. I will say, however, the market last year, last spring of 24 did have a bad break and bounced right back. But you can see many other times a break of the 10-week coincided with more of a
Let's go
digestion.
there. I know we're long on this segment. I'll be fast on the other stuff. I promise, sort of.
Do you want me to
Um,
go to a daily?
yeah, let's go to daily
Okay,
because
and then do you want me to go to this or the
yeah, no,
NASDAQ?
let's go to this one, just see how it played
Okay.
out. So, yeah, you can just stop here. So, looked terrible, like it was going to fall apart, and just you didn't really get your signal that you were out of the woods again until your low is staying above your 21 day. With that day, you went exactly right there. If you just wait for that, wait for the evidence. You don't
Mhm.
have to be a hero and try to buy,
Yeah.
the
First
low.
day after the bad
Yeah.
day.
I know a lot of people, it's an ego thing, trying to buy a low, unless you have a very specific system that you've tested. But most people, they want to say that they bought the low, but if you bought that low, you probably bought 15 other lows. And
Mm,
I look,
mhm.
I do that too, with my own account at times, like, more on an intraday basis. And that's silly. Just let the market prove itself. Let that low get
Yeah.
above the 21 day for a few days. And in this case, you really wanted, 3 days with your low above it and closing up. That's kind of your Webby sweet spot,
Mhm.
of okay, doesn't mean it's going to work out, but if you wait for that, you're going to have less chop. But then you
Yeah.
have to be willing to back away when it
Mhm.
goes back below, if it
Mhm.
goes back below your 21 day.
Yeah. We look at this for a reason. It works. When
Mhm.
it works, it works.
Well, you know what?
Um,
While you're there, go over to that October. You don't have to do the
yeah,
change date, but in that October, if you wait for the 3 days with your low above it,
2,
that
3.
you're kind of out of the woods at that
Yeah.
point. And then it was also with lots of times it coincides with other things like what you're drawing there. And if you had waited for that, you were much better off. And even during those three waves down, each time,
Mhm.
if you just waited for that third day, blue day, with a low above the 21 day, and then sold it when it goes back
Mhm.
below it, it's going to keep you out of a lot of the
Right.
chop.
Yes. Totally agree. All right, I'm gonna reset to today. Really quickly, travel, this was an area that was looking so promising. Also, so much getting hit. Leaders, laggards in the small and mid cap area. Not a whole lot was spared here outside of China, some defensive stuff, and then a couple, we're going to take a look at three tickers here shortly as well. But yeah, not a whole lot was spared, Webby.
Yep.
And this is a consumer spending kind of thing too here with the travel. ARKK, we already looked at, and that's it. Okay, so let's take a look at three stocks on our radar right now. So, speaking of to my point of, I'm not really going to seek out medical, but if it is showing that relative strength, holding up in this kind of environment, then maybe it is worth a closer look. And it does seem like Abbott checking off a lot of those boxes, perhaps a little too extended here for me as a position trader. But it had a really nice swing trade entry this week and it's following up.
Yeah, so we did put it on Swing Trader, but we did take it off today, and we didn't take it off because it was doing anything wrong. We took it off because of the market, and I wanted us to go into cash over the weekend because I didn't want to sit around hoping, and lots of times, let's say the market went up on Monday. Typically, what ends up happening is the stuff that was up on Friday gets sold off as people lock that in to move it over. So I wanted to be in front of that. It's done nothing wrong if you have it. I think this is one of the best looking stocks out of there. It's just not in position, and
Mhm.
they do that continuous glucose monitoring device that I use, and the Freestyle Libre 3. And I would suggest people look into it, talk to your doctor about it. It's very good, even if you don't have diabetes. that, so it's doing something good. It's really kind of catching on. And what I like about this is this hasn't been doing well for a while. So if we're in this rotation phase, which it does feel like medical and some other areas where it's kind of lower valuation seems to be where the money
Mhm.
is flowing this week, or hiding. This is kind of a nice combination. They've got a new product, relatively new product that is catching on and it's breaking out of this area. You've got one, two, how many is it? Six weeks up in a row.
Yep.
5 or more is always something that we like to look at. Let's go down to the quarterly numbers. So this is the problem of it is you don't have real strong sales growth. It's mediocre, earnings are mediocre. So that's why it's been a dog for a
Defensive.
while, you know, but
Mhm.
it's, in this position where it's shown enough strength, but it's not up there. You want to put your PM hat on. You're running 100 billion, 150 billion dollars, and you're looking at your portfolio, and you have to stay 100% invested. Well, you might put more money here. You're not going to sell this. It just looks like it's just starting to go. You're going to be selling your Nvidias of the world, the CRMs, the Service Nows that you've had this huge move in. You're going to reduce those to put them into these, as well as the Coca Colas and the Johnson and Johnson. So this is a kind of this nice blend where it's defensive, yet it's got a little bit of the growth story there where
Yeah.
we can still play.
Yeah. Well said. Okay, let's quickly take a look at ticker TW. This is Tradeweb. Markets had a great week this week. A lot of the strength coming on Friday. It's in a base and was able to retake the 50-day line here, up 3.3% on Friday. So, nice move on a down day and not in reaction to earnings.
I was considering actually buying this personally, just because it was set up. It was kind of in a, just went through that downtrend, but I just would rather have a clear mindset and not have any positions on. But this looks good. And again, let's go to the monthly chart on this one. It's had moves before, built that cup with handle, and had another move. It's not a high flyer. Let's go to the weekly and go down to
Mhm.
the quarterly numbers on this one. This is quite different than Abbott, right? You've got really strong sales numbers and decent earnings, a little more deceleration than we would like, but still okay. And
Yeah.
most importantly, is how stable those earnings are. Let's go up to the stability rating. Why don't you walk through that for them and
Yeah.
tell them about that?
So earning stability, the lower, the better. And it's pretty self-explanatory. The more stable the earnings are, the lower that number is going to be. And then we also look at the growth rate as well. So this is a 3 to 5 year earnings growth rate, and that's a pretty healthy 21%. So if you can grow earnings at roughly 21% over a long period of time, that's a pretty notable thing there. So, it checks off a lot of boxes from that perspective.
Absolutely. Great job.
Okay, so an interesting setup there, no doubt. And then let's take a look at ICE in the same industry group. Different action here this week. It retook its 10-week line a couple of weeks ago and is now holding tight near those recent highs. Here's a look at the monthly here as well, just to give that perspective.
Yeah, so it doesn't really outperform the S&P in a big way over any extended periods of time, or it hasn't since early on when it started trading.
Mhm.
Yeah, that first move, I remember at the firm we were, trading this one very heavily, but then it changed character. You can see it was this rapid
Mhm.
advance, then it fell apart, and then it just this slow pace. Now it's kind of a cup on a monthly cup with handle with a couple flat bases on top of it. So
Mhm.
it looks like it wants to launch from here. Let's go over to the daily and see how that looks. And you know, it had some power on the earnings, but then just kind of went sideways a little bit. What I don't like is that when it tried to break out there, it got turned away. That's a sign that you have some sellers in there. And as you pointed out, you have that gap down on the left side. So this is my least favorite of them. but it was really hard to find anything to talk about, frankly, So
Yeah.
this is CME and CBOE in the same general area also look interesting,
Mhm.
and I was deciding which one to go with, but
Yeah.
I could have gone with either of those as well.
Yeah, absolutely. But that's another thing too. If the best stocks on your screen are mediocre at best, that tells you something about the kind of market, right?
Yep.
So, okay, Webby, are you ready to screen share?
Yes, because I was just texting with Scott to see if I won, and I didn't really win, but he didn't short that one, but he
Did he?
shorted a couple other things related, but I've got to wait and see if he's going to prove that I can tell everyone. Okay,
Okay.
so we're going to do the Bob Weir take a step back and look at the weekly candles here. Can you see it?
Yep.
Yeah. Okay. So with this, I'm going to blow this up a little bit. So we can get in there. And this
Nice.
candle is bad, but it could be worse. It could have been like this candle over here, like this one. So there's hope there. We stayed above last week's low, which you can see with that little weak wick there, the bottom wick. But what wasn't good is our entire trading range was above our the high and low of last or the open and close of last week. So, here we opened up at this level and close down there with really no wick at the bottom, meaning that we close essentially at the bottom there. So when you have a setup like that, it wants to go lower. That would be normal and natural. Let's look at the Nasdaq, similar type of thing. Sometimes you can see a little bit of a difference between the two, but they both look bad. Now we'll toggle over to the regression lines. And I did put a new one in here. I'm not really using it yet, but it started on
Mhm.
the 13th. I think we have 28 trading days using it through today. And I just wanted to get a sense for, what has the action been like? And if we were using this, and I like to use closer to 50 days, I'll stop it at the endpoints at 50 days. But even with this, it looks weak. Let's look at the Nasdaq, um, and that looks even worse, right? It was kind of all over the place in that range, and then we're back below it. So just another reason to be negative. Now we're going to toggle over to the 50% retracements. I'm still using the old ones from December 6th high and the low there on January 13th. We poked up into new highs and then we got turned away. So we at least want to, hopefully, I'm being super negative for no reason and that we just stay up in this area. We will see. And then let's look at how the NASDAQ looks. This one is already down to your 50%. So that's not a good look. But again, you'd want it to trade a lot in this upper half. Um, so we're going to go over to our levels. And again, I've tried to clean this up quite a bit. Let me blow this up to see it better. So I always put our green at whatever your highs are and your thick red one at your last line in the sand before you really, really get bearish. And so that's down here with the 13th low. But on the upside, what we want to do is get back through the December 6th highs, which kind of coincides with the highs here at the end of January and here recently. So lots of the important levels, connect a lot of different dots. Now, this next one over here in this level,
Mhm.
holding above this as well as areas over here, you can see that, that's, some just some key areas. There's lots of lines that I could have put on here, but the
Right.
one that I'm really focused in on is the low the day before the follow through that we didn't need. And so that the follow through we didn't need, if you recall, for any viewers who are with us each week, is January 17th. So the low on the day before the 16th, that's a line that I want us to stay above
Mhm.
or I'll really turn bearish. And then that kind of coincides with the low here on
Right.
the third.
And
And
our for our Spotify listeners, that's around 590. And the previous line that you were talking about that touches a lot of points, that's just shy of 600, so a round number. Also the 50-day line, couple
I'm
of
sorry, I
key
turned.
levels there. Nope, you're
Yeah.
good. Go ahead.
Okay. So we're going to do the same thing on the Nasdaq. And Opie, as I call him, Scott Sinclair, said that he didn't short Nvidia, but he did short the SMHs and the FNGU, which
Yeah,
um,
that I should have known that's the
yeah,
one he went
yeah.
with, yeah.
So I think you owe me what was that amount?
We
51,
didn't say. I didn't
51.50.
say.
Oh, okay. You're gonna play that game. All right. So now the same thing on the Nasdaq, same basic areas on here. You would like to see it get above the 18th of February here, that high, but really the most important level is um, this one over here. So here was your 16th low. Um, Again, right before the follow through, we didn't need. So that is 19,335 for all you listeners on Spotify. And then the level below that is the February 3rd low at 19,141. Our ultimate line in the sand is the January 13th low at 18,831. If it goes through there, then you're looking at a test of the 200-day most likely. We will end with the way we always end, and that is going to be just looking at a very simple chart with your 21 days, the only thing on there. And we cracked through that like it was butter. And then we will look at
Butter.
what, there you go. And then the Qs, same thing. RSP, same thing. IWM, was already through it. So um, everything is through the 21 day, besides the things that you don't want, like XLPs of the world. So I'm going to stop sharing there, and we are going to go over and share the Webby non RSI. Let's see. All right. So again, the Webby RSI that we talk about every week is this thing down here, the histogram, and it just measures your distance of your low versus your 21 day expressed in ATRs. The important thing here is we want to see a wall of blue, like we saw over here, like we saw over here. That means you're in a healthy trending market. We don't have that now because our low is now, underneath the 21 day and underneath the 50 day. The only thing that's above is the 200 day. So same thing on SPY, same thing on the RSP. There is really no Webby RSI to go into. So we'll end with the Bob Marley um, chart, and this is your off high. And this one is, I really love this chart because it
Mhm.
tells you, gives you so much information of the character of the trend and when it's normal and natural, when it's not. And looking at this, it's still normal and natural. I mean, I just have to be objective. The where we would know that it's abnormal is really breaking. So right now, if you can see that, it's just under 2 ATRs off of its highs. And before on February 3rd, it stopped at 2.8, which was about the same level that it stopped back in October off your highs. So, really getting through there, that's when I would start getting concerned. I would get very concerned if it comes down into this yellow area, which would
Right.
be nearly 5 ATRs. Let's look at the Qs real quickly. And again, this one, not bad in those terms, but we just hit fresh highs and a lot of things a couple days ago or close to them. So you would expect that. And let's just look at the RSP. And that one has
Weaker.
been,
Yeah.
problematic for some time. So that's all she wrote.
All right. Well, the last thing, and I'm gonna try to remember this every week, but I guess I only remember on the weeks where there's a lot of damage is song of the week. What's the vibe
Well, you
right
did
now?
say a
What's
lot
the
of damage.
song?
So needle and the damage done, I guess, is the first thing that came to mind. I mean, oh, Freddie King going down.
Okay.
Everyone's done going down. God, I should have really thought about that ahead
I
of time.
know. I
Free
know.
falling.
There
Uh,
you Wow, Webby's bearish.
um, well, the waiting, the waiting
Yeah.
on the positive note, the
Mm.
neutral, wait, waiting, Tom Petty, but actually Marcus King did a new version of it recently. It is just excellent. You can find that on YouTube or Spotify or Apple Music. Um, Better than Tom's, and I love Tom's version. But waiting for that low to get above the 21 days. So just stay
Yeah.
neutral. Like I live in the moment, and that's what Bill taught taught me just by me modeling myself after him is just what is the last bar, and
Yeah.
that is your mindset, and you put everything else into context. And right now,
Mosaic.
it looks bad. It really does.
Mhm.
What do we need? We need to get back
Yeah.
above the 21 day for 3 days and close up, and then
Yeah.
you're probably out of the
Mhm.
woods.
Yeah, I mean, and we didn't even take a look at, and we won't, but stocks like Axon and Kava. I mean,
Oh wow.
man, there was just so much damage. Yeah, underneath
Yeah,
the
Axon,
surface.
we were in that. We were able to get out of swing trader, and as well as myself positive on
Mhm.
that. But just by it fell
Lots of
so
damage.
quickly. And that's something we talked a lot about on IBD Live. And it was the one problem with that is the chart almost looked too perfect.
Mhm.
That was the one flaw, was it was so obvious, but really was news around it. Because that's not a foolproof. There are a lot of
Right.
perfect, obvious charts that
Mhm.
end up working. So you don't
Right.
want to be like, oh, that's too good of a base, I'm not going to buy it. But you just
Mhm.
know that if
Know
that
when to
thing
get out.
starts falling,
Yep.
get out. And that's what we did.
Absolutely. Yeah. All right, Webby. Well, thanks so much. See you next week.
See ya.
And thanks everyone for tuning in. That is it from us for this week, but we will be back with more on Monday morning on IBD Live, breaking down the market action in real time, talking about how we are handling our own portfolios, setups that we're watching, what the team is seeing out there, stocks on the move, all that good stuff. So we look forward to seeing you there on Monday. And then, of course, we will see you here Monday after the close. Hope you have a great weekend, everyone.